tremendous amount of respect for. It's time for me to get out the way. I remember a couple months ago, he had reached out to me after growing his demo account to over $20,000. He said, T, I'm ready to train. And when he told me that, I got off the phone. I was so excited. I looked at Kay. I said, man, Dominic is ready. Like it was like a kid. I was like a kid in a candy store. It's like a father seeing this, like your mentees go crazy, grow up with leadership. They're excited, they're learning, and then you go to another level. After you learn it, you teach it. So I just want to thank this brother I'm about to bring up for being an awesome job, doing an awesome job, being an awesome leader, killed it last week, and now is about to take over and kill it again tonight. So without further ado, I'd like to welcome you guys and introduce you guys to Mr. Dominic, who's an executive trader on our organization. And I turn it over to you, D. Are you ready?
Yeah, I'm ready.
Okay, take it away, D.
Okay, guys. Hey, how y'all doing, man? Sorry for the delay. I had some technical difficulties with signing on. So real quick, last week we went over how to properly use MT4. Before I was disconnected, there was only a few more nuggets that I wanted to show you all before I go ahead and go into the main aspect of the training, which is fundamental analysis and intro to setting up support and resistance on your charts. So last week, I left off with learning how to set up a template. And what we did was we right-clicked or F8 to pull up your properties. When you go to your properties, what you would do is pretty much leave your settings the same way I got it right here, the exact same way. If you are okay with the background that I have here, it's more visible for your eyes and it works for you, then go ahead and do these settings. Once again, to get to this part, you either want to right click or press F8 on your computer and the same screen will pop up. And like I said, everything that I have on here is the same way you can go ahead and set your computer screen up. With that being said, I'm gonna go ahead and show you guys a nugget that I found out with MetaTrader that MetaTrader 4 has inside its program. It is not an indicator, but it also is a significant leader that lets you know that the market is going to change. It's pretty much a form of an indicator, but it's not an indicator. It's just a doji. So if you guys can see where I am, and we all know that the doji shows that the market is about to do a reversal or price change. If you guys have this screen up in front of you, you can see where it says line graph. And you guys have the same colors that I have on your chart. It should be pretty visible. If you leave your line graph at lime green with the same colors that I have here or close to it so that your chart is visible to you, leave your line graph at lime green and click OK. When you click OK, guys, MetaTrader 4 automatically highlights your dojis for you. And that's on any time frame. So I'm gonna go ahead and go to the daily because it shows it's less crowded as far as the wicks go. So as you can see, we got one doji right here. Let me zoom out again. And as you see, there was a bearish market, but 2 candlesticks later, the market went in a bullish trend. And like I said, these are some of the tips and tricks that MetaTrader 4 automatically has in this program, but it is not an indicator. And like I said, you want to go ahead and make sure that your line graph is a color that's visible so that you can see these dojis. And once again, my line graphs are light green. So I'm trying to find some more to show you on here. Here we go with another one right here, another doji that shows you a price reversal. These are all, like I said, a MetaTrader 4. I'm not sure about TradingView if it offers the same things or not, but it's definitely a nugget to use when you guys are trying to figure out or trying how to read these candlesticks so you can understand what's going on with it. Here's another doji. Guys, these, like I said, these are embedded in MetaTrader 4. All you have to do is set your chart visible enough so that the chart brings it out to you. Like I said, the market comes to you, and this is a clear indication that this is something that MetaTrader 4 does for you. So with that being said, let me go ahead and finish showing you guys how to work these few and simple tools. And like I was saying last week, the thing with MetaTrader 4 is it has the same options, just in different locations. So it's kind of confusing. The same with over here. You're gonna find your tools to draw your trend lines and your equidistant channels the same way you would find up here in this toolbox. MetaTrader 4 is pretty much the same thing as TradingView, just at a smaller scale with less tools that you can activate with. And once again, guys, like I said, in order to save these charts, all you need to do is right click or F8 properties. You can set yours up just like mine. Go to common. I don't like to have a grid on the back, so I always take it off. And you click OK. Once you click OK, I'm sorry. You will go to save template first. I forgot that. Go to save template first. Once you did all of that correcting, as far as the same way that I have my chart set up. And you would go ahead and just save the chart name. So that way that when you come in and out of these charts, you won't continuously have to change your color, your charts, the line charts and whatnot with that. So it's pretty much, it just makes it a little bit simpler to go ahead and dig in and trade. And for all of those other people that missed how to add pairs to your market watch list, as I was saying, what you want to do is go up here and click where you see this negative and positive or bullish and bearish arrows right here. And click anywhere inside this market list, right click, and click symbols. Once you click symbols, it'll bring up all the pairs that is possible to trade in Forex. And once again, guys, you only want to trade the pairs under FPT-Forex. And if you get confused, I can't remember that, just make sure anytime you look at a pair, it has an underscore at the end of the pair. And the only thing you have to do here, guys, is click on a pair until it turns gold. And it's going to automatically add it to your watch list. It's just that simple. Once again, to add pairs to your watch list, you want to go to Market Watch, right click inside anywhere the Market Watch, go to Symbols, FPT Forex, and just double click on the pair that you want to highlight. The time frame is pretty much self-explanatory. Whichever time frame that you feel comfortable training, that's what you want to go ahead and mark your charts up with. And whatever feels for you, whether you're a scalper, a day trader, or swing trader. And that right here will set the tone for the market activity for how much you're going to be trading. And I do recommend you guys getting the mouse so it's easy for you to scroll back and forth instead of having to continuously click, to figure out what's going on to move the market. And also, guys, this right here, it's pretty much a border shift, just like on Excel at Word. What you want to do is, in order to shift the border left or right, you want to make sure the opposite side is not clicked. So if you want to go left, you want to make sure that the right isn't clicked. And if you want to go farthest to the right, you want to make sure that this left bullish arrow is not clicked. And it'll bring the market all the way over for you. Guys, what I want to do is go ahead and leave that alone. If you want to get with me so I can go over it again from the beginning, I don't have no problem with doing that. But I want to get into what my main objective was for the night. And that's learning fundamental analysis and chart and support and resistance. So see this. This computer is moving slow. Can you guys see my screen and what I'm trying to click on? Okay, there we go. Can you guys see investing.com at the top of the screen?
No, you gotta it's still on the charts, D.
Okay.
Thank you so much.
Okay, can you guys see it now?
No, it's still showing the same thing.
Okay. So there we go. It should be there now, correct?
Nope, still the same thing.
Still the same thing is popping up. Okay.
Okay, now we see it, D.
Okay, so I need to double click on. Okay, guys, so this is what I want to get you guys started on. Before you guys enter a trade, always remember to check the news and learn how to trade the news. And I'm going to walk you step by step in order how to do that. So one app that I want you guys to go ahead and download is investing.com. Okay, investing.com gives you all the current news, the previous news, and the analysis on the stock market, the Forex market, and also the cryptocurrency market. But right now, we're just going to focus on the Forex market. And like I said, guys, go ahead and download this on your phone. It can save you a lot of time and money by knowing what to do or what the market is doing before you initially put an investment inside the market. So what we're going to do is go ahead and go over to news and click economic calendar. When you're looking on your phone, it's going to be a little bit different, but just make sure you go to economic calendar to go ahead and be able to access how you can view the news, the upcoming news. Now, guys, the reason we trade the news is because it's profitable and also because of its ability to increase volatility in the short term of the market. And one thing to know for sure is that the biggest moves and most watch news come from the U.S. And the reason is because of that, because the U.S. dollar is the reserve currency, meaning it's this one of the strongest currencies out here. So everything happens through the U.S. So this is what everyone tends to watch. So what I want you guys to focus on is, again, economic calendar. This tells you what upcoming news events are going to happen and what time they're going to happen. Unfortunately, it comes out in military time. If you guys don't know how to read that, anything with a 0 is AM, and anything starting at 1300 and after. 1300 is at 1 o'clock, and anything afterwards just goes up plus an hour. If you're having a hard time with military time, just go ahead and Google it real quick. It's simple. But the first thing I want you guys to realize is when you look in, before you enter the trade, you always want to look at what today's news is going to be about. Okay. It will tell you the currency pair that the news is going to talk about. And the third pair of the right here shows you the importance or the volatility expected in the market. Now, the main thing that you want to look for, of course, is the time that the news is going to be played, and also the volatility. And when I say the volatility, it shows you with these bull heads here. Now, with it being a bull head doesn't mean there's going to be a bull or bear market. It just shows you what's going to happen. Now, if you have one bull head and there's a total of 3. If you have one bull head that's highlighted, then there's not going to be much more movement in the market because of the news or what's going on in those countries. But if you see here where Euro is going to head news today at 2 o'clock in the morning, it was very volatile in the market. And I'm more than positive any of you guys were in the market this morning, you saw that big shift in, whatever the news happened to be. But you want to make sure that you either learn how to trade the news or stay away from the news with the time and the volatility that it's showing. If it's high, like I said, you either want to stay away and wait for the news to finish or go ahead and learn how to trade the market with the news. I want to tell you guys a little bit about that, how to trade it with the news if you have enough time. But and also, guys, becoming more of a fundamental trader teaches you how to go ahead and trade the market without indicators. You know, as we progress in this trading field, we learn how to read the market without, you know, with just support and resistance and price action, which is what indicators are based off of, computer generated price action. You know, you guys could become your own price action traders to where you don't have to depend on those indicators. And this steps right here that I'm trying to teach you all are the basics intro to learning how to become a sufficient trader without indicators. Now, again, you guys probably wonder, okay, well, how can I trade the market with the news? What you want to know is what's going on. So if you see that you're better in-depth understanding, all you guys have to do is click on this right here, which is telling you what the news is going to be about. And what it does is go ahead and give you a pretty much synopsis of what the European German GDP is going to be about for that day. A lot of times when you see the GDP up, that's pretty much showing you that the news is pretty talking about the growth or the development of the country for a couple of minutes of that day. Guys, the news doesn't last much longer than 1 to 2 minutes. So a lot of times you're going to get in and get out. I mean, it's not like the Channel 9, Channel 7 news where it's on for an hour and, you know, you're going back and forth with going pretty much just go ahead and drop for that country, and you get in and you get out. Understanding of how that country works and what's going on and what that news is about to tell you. And that's pretty much how you want to make sure that you look at the news before you enter a trade. Like I said, it only lasts about 1 or 2 minutes, if that, and the market is going to go ahead and retrace back to where it was. A lot of times we think that we didn't have a good analysis where we're in the trade and it goes and does a bearish move, drops, where we gain 20 or 30 pips. You know, we thinking that's just all our analysis, but in all actuality, it's the news that we didn't think to look at or think to check, which initially gave us a lot of pips or took a lot of pips away from us. And like I said, guys, the main thing you want to do is make sure that you look at the news the day of and the day before, so you can know what time to enter or exit the market. Wait for the market to settle down. My computer is moving a little slow. But with that being said, there's another app out called Market. I'm pretty sure it gives you the same aspect of how to look at the market and how to trade it. But again, guys, like I said, you can go ahead and download this app. Make sure you look at the economic calendar so you can know to either stay in or stay, you know, you don't get bit, you know, by the market or what's happening in other countries. Another thing that I want you guys to understand, can you mute yourself real quick? So another thing that I want you guys, hello? Somebody computer, somebody phone or something. Okay, so another thing that I want to show you guys about learning with fundamental analysis is trading correlation. Learning how to trade pairs that correlate together positively and learning how to trade pairs that correlate negatively. So when I say correlation, that just means that the pairs either move together or the pairs don't move together. And a lot of times we don't take the time to do our fundamental analysis, which lets us know, are we really buying and selling a pair against each other? Now, you guys can see my screen. it's telling you, this is a quick synopsis of some pairs that move together and some that don't. And I would suggest you guys Google this or write it down, because if you don't pay attention or you don't use fundamental analysis to understand why currency pairs move together or which ones move together, then you could be possibly buying and selling pairs and really zeroing out. You're not making a profit, because if you were to say you buy USD and you sell GBP USD, you're really going against the market, because both of these pairs move together. So if euro is going up, GBP is going up. You know what I'm saying? And a lot of times we don't take the time to sit down and realize these things, and always wonder why we break even on a trade when you think you might be up 10 pips, but you only made like $2 on top of the spread. You know, like I said, guys, it's all about fundamental analysis, taking the time out to really understand the market instead of depending so much on these indicators to have your back. I mean, don't get me wrong, indicators are great, but if you don't really understand the depth of the market, then you really not giving yourself the due diligence to be a great trader. But again, that comes with time and patience of trying to learn the market. And like I said, for you guys that are really not sure what the correlation of the pairs do, I'm going to go ahead and give you an example that I started to work on, just to show you that pairs move together and they also don't move together. So for right here, what I'm going to do is go ahead and pull up my other screen right here. Okay, can you guys see my multi-screen right here now? Can you see the multi-screen I got going up?
Yes, we can see it.
Okay, so this is a good example of why you want to take the time out to do fundamental analysis about the pairs you trade, okay? Because if the pairs correlate, then that means you could diversify your portfolio by putting a buy in two different pairs that's going the same way, instead of just, putting all your money in one pair. And it's, you can get 2 for 1 pretty much. Oh, and also learning pairs that correlate or don't correlate, it helps you to not buy and sell against yourself. You're only cheating yourself if you don't understand this. I know myself, when I first started trading, I really didn't understand. I was just picking pairs and trading, but I didn't understand the fact that pairs move alike, because a lot of countries depend on each other. Just like now in the news with the tariff wars or with the US dollar. The US dollar is decreasing, so the price of gold is increasing. So when the market is doing good in the US, then of course the gold is gonna do bad, because it's a backup currency. I'm sorry, a backup form of payment. So what I did was I went ahead and put 2 positive correlating pairs up, and how do you get this shot? And 2 negative correlating pairs together. So what we have here is GBP USD and Euro USD. These are my positive correlating pairs. And on my left, we have USD CHF and Euro USD. These are my negative correlating pairs. Now the pairs on my right, these pairs move together. That means they're positively correlating. So whatever I do here, that means that this pair is going to do the same thing. And that you guys can see, that's the truth. So what I'm going to do is, just to give you another example, I'm going to switch to a different time frame. We're going to go from the hourly to the daily. And as you can see, and that's in the daily. Let's go to the weekly. The market is doing the same thing. You guys get what I'm saying? Because at this point now, you're starting to see that if you were buying a GBP USD and you have no clue that Euro USD moves the same way, you could be buying GBP and selling Euro USD. And now you're doing what? You're breaking even. You're not gaining any money, although you think you might because you gained some pips. But if you really look at your profits and the margin levels, then you haven't won anything. You pretty much just played in the market with indicators and analysis for no reason, for however long it took you to put that trade in. And on the flip side, guys, these parts that don't move together, what you don't want to do is accidentally buy both of these pairs for a bullish, if the market's bullish, or if it's bearish, or if you think that it's a bearish market, because they move separately. You know, and like I said, if you got a 4 or 5 pairs up and you just going clicking back and forth because the indicators tell you so, then you know you're not doing yourself a justice, because you're not gaining a profit. You're losing money at that point, because these pairs are going different ways, but yet you bought one pair and sold the other, not knowing. You bought both pair, not knowing that these pairs do not correlate. These pairs correlate negatively, so you're losing money. And with that being said, a lot of times we don't understand the in-depthness of fundamental analysis, because just by you taking the time to read and learn, understand a pair and trade 1 or 2 pairs at a time, you would have been able to see, or just picking up a book to figure out what's going on, you wouldn't be able to see that it's smarter to diversify your portfolio by picking the pairs that move together versus the pairs that don't correlate together. You know, so versus if you just, like I said, if you had Euro USD and you went for a buy or sell, you could have doubled your profit by putting in the same order with GPB USD, because they're gonna move the same way. Like it's gonna happen. And another thing, guys, that I wanted to show you what I'm gonna tell you about before I go ahead and start drawing up a charts, is that you can also figure out how to enter or exit the market off defining correlation within the pairs. And when I say that, what I mean is, if you want to enter on GBP USD for a sell or a buy, the next thing you want to do is look at a pair that it positively correlates with. So let's say we wanted to go in for a sell. We could see that clearly both of these markets, let me click on this right here. We can see that both of these markets are going in a sell. Both of these pairs are going in a sell. So let's say I want to make sure that it was a sell without using any indicators, without using any stochastic, MACD, RSI, anything like that. We would go ahead and look at correlation as a analysis to enter or exit the market for buy or sell. So like I was saying, right here, you would look to see, you would get the correlating positive pair. And the first thing I would do is look to see if they are both matching a sell, which they are. And then I will look to see if the non-correlating negative pair, the correlating negative pair did exactly what they're doing now. They're going in the opposite direction. Okay, that lets you know that you're okay to enter for that sale. That's one indicator to let you know that your analysis is correct as far as entering for a sale. And the same way for a buy. If the market was going up, over here on the GU, and you wanted to make sure that it was a good buy. You wanted to make sure it was a good buy. You would do the same thing for the EU. Look to see if the market was going up, which I'm pretty sure it would be. And then again, you will go ahead and look at the negative, the correlating pairs that are negative. If the pairs are negative, they not showing correlation, and you got the pair right here that is matching this, then you're good to go to know whatever trade you made right here is going to be correct, or you have the best analysis to go ahead to think it's going to be correct. And also add that in with your other analysis as far as support and resistance, pullbacks, retracements, whatever you use, or your fibs, harmonic scans, whatever you use to try and, use for an indicator to see what the market is going to do. What I'm going to do real quick is go ahead and switch a pair to show you guys how strong correlation affects the market. So we have, let me go ahead. Let's go ahead with USD CHF. Again, guys, I showed you all how to work the multi-windows last week. If you are still stuck on that, I have no problem with showing you. And then we're going to use USD JPY. Now, these pairs correlate positively, meaning they move together in the same direction. USD JPY, USD JPY. So many pairs on here. USD JPY. Now you guys can see that. You know, you can tell I'm not making this stuff up, man. The market tells you these things without depending on indicators. Price action is your own indicator, guys. Like I said, it's just computer generated and it's given to you, you know, pretty much as a crutch until you guys graduate to learn how to look at these charts on your own. And like I said, these pairs correlate. All you have to do is Google, you know, do some research. Any pair of USD as the base or as the quote pretty much are correlation pairs. And that pretty much helps you define, you know, what the market is going to do, or what the market is going to do, what pairs move together, what pairs don't move together, so that you don't trade against yourself. Like that could be, you know, one of the dumbest mistakes that we make unknowingly is trading against ourselves when we buying and selling one pair and they work together. You know, they working together, then you're not making a profit. And I'm gonna do one more pair, guys, just to show you how real this is, because, you know, when I found it out, it blew my mind. I've just been wondering, like, how am I losing so much money on these pairs? And, you know, I'm assuming that everything that I'm doing is correct. On top of that, like I was telling you guys earlier, not watching the news. You know, the news tells you a lot and it keeps you from losing a lot of money. And Euro, USD. These pairs correlate also, guys. And like I said, you can see the market is doing the same thing. The market is in a downtrend. Market is moving in a downtrend. And that's pretty much, guys, learning correlation. You just want to figure out if they move together or if they don't move together. And once you figure out if they move together, they don't, learn how to trade them. Either trade them separately so that you don't go against yourself, or trade them both in the same way if they go together, so you can diversify your portfolio, you know, and gain more pips that way. Now I'm gonna go ahead and show you guys, get into charting and some support and resistance from scratch. Give me a minute so I can get my screen up here sharing. Okay. Okay, can you guys see my screen now? Okay. Yeah, I hope so. Ain't nobody said nothing. I hope you guys can see my screen.
Yes.
Okay, thank you. Whoever that is, I can't tell, but I appreciate it. So I know somebody on here. All right, so I already got my settings, guys. Like I told you, these are the settings I use. I'm sorry, wait, no, they're not. That's how you get to the settings to change that you want to use. But these are my templates that I saved already. And like I said, I'm gonna go ahead and take my screen to my template that I made. So the first thing I wanna do is I draw my support and resistance with line charts, because it's a lot easier to identify the highs and the lows of the market. Using candlesticks gives you, it's too busy, it's too confusing for me. It may work for some of y'all, but for me, it doesn't. So, you know, like it's kind of hard looking at this screen, trying to lock in where's the high, where's the low. Like, I ain't got time for that. I'm sure y'all don't either. So I try and make things as simple as possible. For me, because I'm a day trader, I work a 9 to 5. I pretty much set up on a daily. I do all of my setting up on a daily chart. and I enter on the hourly. That's because the daily gives me more of a perspective, gives me a wider view of what the market has done. And I can go ahead and it's easier for me to set up my support and resistance, my trend lines and my channels to go ahead and trade from. So that makes it easy. And then again, like I said, I enter on the 1 hour because I can drop down and it gives me, a time frame to see what the market could possibly do on a shorter time frame. Okay, guys, so like I said, what I do is I go ahead and change my charts to a line chart. And I try my best to stretch it out as far as I can so I can get enough on my chart. Get enough on my chart so I can go ahead and set up some good support and resistance. Okay, so like I said, the first thing you want to learn about setting up support and resistance is finding 2 or more points that touch so that you can access a support and resistance line to maintain, to start, to get a start point of where you want to start executing your support and resistance line. So the first thing I normally do, guys, is drop a line where price is currently at, or close to it. And then as I go on, what I'll do is, go ahead and drop a line at the highest the market has been. Actually, you know what? I'm leaving you guys a step out. We're in August. So I normally go 6 to 8 months back to see my working. I give myself a window to review the market. So that's 1, 2, 3, 4, 5, 6. Let's go back to December. So what I do normally is go back 6 to 8 months to view what the market has done in the past. And I dropped me a line. Guys, all I did was use my vertical line to drop 6 months back from today. Okay. And like I said, the only thing we're going to focus on is a 6-month period from today till, December. So like I said, the next thing I do is draw a line at the highest the market has went, which is the peak. The peak is the highest the market has peaked at, and the valley is the lowest. So right here, I'm gonna go ahead and mark this. And guys, get familiar with learning how to draw on your chart so that you don't forget where you are. It makes it a lot easier to keep up with, your certain lines and everything like that. So if you ever are doing a training or you going back showing someone what you were doing, you can keep up with it yourself, especially toggling back and forth with the time frames. And the next thing I'm doing to do is draw my valley. It's the lowest point the market has went within 6 months. And like I said, guys, we want to work on a 6-month time frame from today to 6 months previous. And this is where my line is. This is where I dropped it at. And this right here is my major support, which is my valley. Okay. No T about to jump on here in about 5 minutes. So pretty much, guys, once you start this, then you can pretty much get a view to be comfortable to learn how to go ahead and drop in support and resistance line. So this is the highest the market's went in 6 months. This is the lowest the market has went in 6 months. And from there, you can go ahead and start plugging in, dropping in support and resistance lines just by looking for 2 or more touches to get you started, to learn how to, initially enter and exit the market. Now, as you guys can see, I'm on the daily. Like I said, I drop on the daily and enter on the H1. Here's my first I just dropped. We got a support here. We got a support here. We got a support here. All you need is 2, but if you get 3, you're great. So now we're going to go ahead and do the same thing, guys. Look for another place where we can get 2 or more touches. So where we can go ahead and get us another support or resistance line, wherever it may fall, once we begin to turn our candlesticks on. Here we go right here. We got a touch here. We got a touch here. and drop some up here. Let's see what we got up here. It's okay just to go ahead and drop them. And once you drop the line, just go ahead and double click so you can move the line around to see where you might go ahead and grab those touches. Now, a lot of times it's good to get a line that's turning to support and resistance. That's pretty much a good indicating line that the market is either standing strong or it's gonna break. Here goes another one, guys. We got a touch here, we got a touch here, and we also have a touch here. And it's pretty much that simple, just drawing your support and resistance, guys, just like that. What you don't want to do is overcomplicate it. You want to try and drop in at least 10 to 11 lines to help. And here goes a good example right here. Yeah, this is what support turned into resistance, okay? It broke through and came back and retested as resistance. Started off as support, market came down on the bullish trend, retested as the ceiling, as the resistance. And sometimes if you may have to move over past the 6 month period to see where you can get 2 or more touches. And once you do that, then you pretty much, it's okay to do that from time to time if you can't get enough over here. And here we go again. We got what the market was support, broke through, came back up, broke through again, and tested as resistance, as a ceiling. Now, what I'm gonna do real quick is go ahead and switch over to my bar charts. Now, as you guys can see how confusing that could be with that. But now we have support and resistance lines drawn. Of course, we can add more. But what I like to do is go ahead and show you how to start off by setting them up. Once you set it up this way, it's a lot less confusing on your eyes to not have to toggle back and forth with the line charts and the bar charts. It's just too much noise going on with all of these lines. With all of these candlesticks forming. Now, a lot of us want to know how do I enter or exit the market? Well, of course, one for sure way is that you want to see if you can get 2 consecutive candles going in that direction, okay? Let's see what we got here, if I can get a good example. Okay, here's one right here. I don't know if you guys are too familiar with engulfing candles, but this right here, see how we doing on time? I'm good. I don't want to get into too much and can't continue with it. Okay, cool. I can keep going then. So this right here is an engulfing candle. That means that this bullish candle has taken over the market, is now in an uptrend. This line right here was my resistance line. But since, where am I going? But since I had that bullish breakout, right here, the market broke through this resistance. Okay, I'm pretty sure I can have another support, some more support resistance lines in here. But when the market broke out, what it did was it came back and made this resistance line a support line. It came back and I'm tongue-tied. It came back and tested this line. Okay, so when it tested this line, it shot back up. It went from resistance back to support, and the market went up in a bullish trend. That's just off engulfing. I can get more into that a little bit later, but it's just showing you pretty much how the bulls took over, broke through the resistance, came back, tested that line, which is what you really would have wanted to enter the market, guys. And that's another thing. You never want to enter the market based off the first candle. You either want to get a market, another 2 or more candles confirming that trend, or when you get a breakout, you want to make sure that the next candle retests that line, whether it's a bull or a bear. We really don't know once the market is closed, because it could have started and then finished as a bear. But either way, once the market breaks out, you want to enter off a retest. And this market definitely had a retest, which is right here on this bearish candle. It retested this resistance and came back into a bull trend, a bullish market. That's an engulfing candle. But let me go ahead and try and find how I would have had it. Okay. Go down to the hourly. Okay, guys, so like I said, I enter on the daily, draw up on a daily, enter on the hourly. So with this being said, here's a good example right here. Here's a good example right here. Again, we never know what the market is going to do, so we just try and go off of what we know, of what we've seen, or how the candlesticks form. This is a good example of a continuation pattern. And this pattern broke through my resistance line, broke through this resistance. Because guys, if you understand, if the market is going up, 9 times out of 10 is going to break your resistance. If the market is going down, it's going to break your support. So if you ever get confused about where you are, just look at the trend of the market. And whichever way it's going, I'll let you know which side is going to break, whether it's breaking the support, the supply or the demand, the resistance or support. So once again, here we go, guys. And let's just act like these two candles didn't form, these two bullish candles didn't form. And the market came down and broke support. Initially, this line was support if we're looking in the past, because we got the two bullish candles that came and broke through support. Then the market became bullish. So we have one bullish candle here. We have another bullish candle that barely broke above resistance. And since the market broke above resistance, we don't want to enter until we get 1 or 2 more candles. And this is a clear indication of a continuation, a bullish continuation pattern, because we have 3 consecutive candles. Now, a lot of times people would either got in here, which is a good place to enter, and some would have got in here once they saw the market going. But as you can see, the market still rallied up. We had a little bit of not resistance, but a little bit of consolidation. But the market still went up. Let's see, what is that? The market still went up 42 pips. You know, that's good for, what is that, 5 hours that you're not sitting in front of your computer, you know?
Yeah, we got to be ready to close it up.
Okay. So like I said again, guys, this is a continuation pattern that broke the resistance. And you guys would have known and where to enter or exit. Like I said, you would have entered off that second candle. Exit. If I had a head, which I'm sure there would have been another support or resistance line here, I trade from line to line. And real quick, guys, like I said, so if I entered here at this line, I would have exited at this line, you know, in which like the market did still continue to carry. But like I said, it would have been over some hours. So you would have had to been patient enough for the market to hit here. But that's again going with a day trader, swing trader. All I do, guys, real quick, is I enter where the market breaks and has a continuation pattern, and I exit with my next support or resistance line. And that's how you draw. You're not going to have these many pips all the time. Sometimes it could be shorter. You know, a lot of times it's going to be shorter. Sometimes it's going to be longer. But again, guys, you just enter and exit from one support and resistance line to the next. You know, and that's how you can go ahead and confirm your entries and exit. And as you can see, if I had to enter here, I'm almost done to you. If you had to enter here and let that trade ride, your take profit would have been 59 pips over 42-hour period. But like I said, you would have had 4 to 5 entry trades in, and at the same time, you know, you'd have been doing other things. You want to sit in front of the computer and watch it. So again, guys, you just enter and exit at the previous support resistance line that you drew. That's it. You go from one to the other. The same way if I was going for a sale, I had to go from here to here if the market was set up to go that way. That's you trade from one line to the next. That's all you got to do when you look for an entry and exit point. Okay, T, go ahead, take it away.
Okay, thanks, D. I just want to thank you for doing an awesome job on the trainings every single night. Man, you've been blazing the trail, man. I really appreciate you so much. For those who got any questions, please hit up D in the group chat. Just let them know how you guys are feeling in the group chat. Shout them out. Great job, D. Awesome job again. Keep cooking, bro. I'm proud of you. Guys, we got to hop off this because at 9 o'clock, we got some bosses hopping on as well to get some sauce. If you guys got some bosses, you guys can get them on at 9. We appreciate you guys. Love you guys and have a great one tonight.